Whoever buys a property in Ontario, for example, in Canada, they have to pay a land transfer tax, and they have to pay the lawyer's fee to close that deal. They don't have to pay, very important, they don't have to pay us, like the real estate agents, because in that case, the listing agent is paying through the listing brokerage.
Okay.
The buyer usually is 2.5%, 2% in some cases. So the buyer doesn't have to pay that amount.
Okay.
Well, Marius, it's good to see you.
Good to see you too.
How long have you been a real estate agent?
Since 2005.
Yes.
So almost 18 years.
18 years. Listen, congratulations on all your success.
Thank you so much, Scott.
You're the best at what you do.
Thank you. Thank you so much.
Okay.
Let's talk about the closing costs.
The closing costs.
The closing costs are somewhere between 1.5% and 4% of the purchase price.
And this is for the buyer. We're talking
For the buyer,
right now.
which divides in. So the closing costs are mainly land transfer tax. So it's a tax that you have to for the government of Ontario, and I'll let you know in a second how much will be for different prices.
Okay.
And then the legal fees. So both of them, they are like closing costs.
Okay.
Okay. Now, if let's say the property that you purchased, it's a vacant land and is less than 55,000, then that purchase price has to be multiplied by 0.005, which is very low. But nothing today, I think in today's market, you can find less than 55,000.
Not even a mobile
even
home.
mobile
I don't
home.
think it's 100. And
Then
something
another range is 55,000 to 250, so $250,000. In that
Okay.
case, you multiply the purchase price of that property by 0.01, which is about $275 for, let's say, 250,000 home. Then will be 250 to 400, so it will be a range between $250,000 and 400,000 and in this case that percentage goes from 0.01 to 0.15,
Okay.
which is $1,525.
Yeah. Still, we don't see so many
not
properties.
so many.
Yeah, like.
Now we are going between 400 and 2 million.
Okay.
Now,
I think. Yeah.
now this is much more,
Like
let's say, more often in today's
realistic, yes.
reality. So you have to multiply that price with 0.02, which means 3,525.
Okay.
And for houses over 2 million, then that percentage goes to 0.025. So goes from 0.001 to 0.025. So it goes gradually based on the okay. And then the lawyer's fees are between 1,200 and 2,400, depending on what type of property, what the value, how many mortgages you put. Some people, they cannot get one mortgage, they can put two mortgages, so then for the second mortgage it's a little more expensive. It's if for some reasons another lawyer, so in this case with the second mortgage, another lawyer will be involved because he has to do the second mortgage sometimes with a private one, or like a B lender or whatever. And if that second mortgage is more than 75,000, then another two lawyers are involved.
Okay.
So basically the cost will increase, even maybe more than 24. But usually it's between 1,200 and 2,400.
Because it's good to know. Right?
And now,
because we have to have the money when we do the closing. So
exactly. And then the closing, like so many people, they're asking about the closing. How long will be the closing when we purchase a home? So it's, from my experience, the minimum, let's say the minimum closing, could be like 3 weeks, because the lawyers, they have to communicate with the bank that you take the mortgage, and then they have to exchange documents and stuff like that. And the process will take more than 3 weeks.
Okay.
So 3 weeks, it's a minimum. Then could be couple of months. Let's say if you buy from builder and then the closing is in 6 months from now, or even a resale home.
Okay.
Let's say you buy a resale home and that owner purchased from a builder. He says, okay, I will sell your home, but I need 6 months closing. So could be between 3 weeks and 6 months and even more.
Okay,
but
so you're
usually
buying
like,
something, it's not even built yet.
Yes, or you buy or resell, but that owner purchase another like a new home, and that one is, let's say, 6 months closing.
So he needs to wait
See,
until his house is done. Okay.
So there's a lot of many scenarios, but let's say the most common, the closing days are like 60 days, the most common.
Okay.
45 days, 75 days. So 30 to 90 is the range.
Yeah.
With average 60, but could be even shorter. Or longer.
Yeah, when we came to Canada, actually, when we bought our house, it was a different house we really like, but because the seller asked for 6 months time, we decided not to wait. Because again, it was the same situation. He was waiting his house to be built. So so now I remember.
It's very normal what you said, because what happened is, if you get a pre-approval for a mortgage, that rate, it's let's say they approve it for a certain rate.
Yeah.
And that rate, they can keep it maximum, I think, like 3 months. I don't know. I'm not an expert in mortgages.
Yeah.
But let's say they have a specific time. If you don't buy something in 3 months, then that you lose that rate, and then if the rates are going up, then you have to buy for a higher rate, which you are not happy.
Exactly.
So
you don't even know
you
if
don't
the
want
rates
to
go
go
up
6
or
months,
down.
because it's very tricky. In 6 months, anything can happens. You can lose your job. You can everything you can happen.
Stuff,
and then today you are pre-approved, but 6 months from now maybe not.
Yeah.
So I'm not advising to go for a longer closings, especially in a downfall market, because in 6 months the house could be much less, and then the appraisal came much lower. The appraisal.
So by the way, appraisal. What's appraisal? Why do we need an appraisal? If you can just explain for
it's a good question.
For us, we don't know the language.
It's so interesting. When it was a good market, like 10 years ago, 5 years ago, even 2 years ago, nobody was thinking about the appraisal too much. Why? Because the prices always they went up, okay? And the banks, they knew, okay, so let's say if this guy buy a little bit overpriced, let's say until the closing, so 2-3 months from now, the market was like that. So the price, the value of that property will go up.
Okay.
So it was not a much big issue with appraisals, and sometimes even they didn't send appraisal to see the homes because it was too easy. It was an amazing period of time for the banks. But now in the last year or so, 1 year and a half or so, when the market went down and mortgage rates they went up a lot, like 7 times they went up. Now it's a big issue. Why? Because the market is going like this right now, or maybe flat. And let's say if you have a longer closing and the market is going like, in downturn, then the bank will not give you the appraisal on the time when you make an offer. They will make an appraisal 2 weeks prior to closing. So let's say if you have 6 months, probably in 6 and 5 months and a half, that appraisal comes much lower than the price that you purchased.
Oh my God.
And this is very tricky for the first-time buyers. Why? Because the first-time buyers, usually they pay 5%, 10%, 15%. Rarely they pay 20%. By the way, we have to speak about another session about the CHMC insurance rates.
We have so much.
So what happened now is so many deals they fell through because the appraisal they came very low because the market is going down, and the banks, they are so much conservative to give give mortgages for higher values. So now the appraisal they came lower than the purchase price, and what happened is the buyer, they have to pay the difference between the purchase price and the appraisal value, plus the whatever percentage they want to pay. Let's say if they want to pay 5%, which is minimum down payment, let's say the appraisal came another 50,000 apart, then they have to pay just 5% plus 50,000. If they don't have the extra 50,000 because the appraisal came lower, they cannot close the deal.
Oh wow.
So in today's market, the appraisal is so important. And it's so tricky. So always I advise, the buyers, I say, you know what, if you have 5%, just wait until you have maybe 10%, or you have a little bit more, and then whenever you put an offer, we put an offer, and the appraisal come a little bit lower, then you put 5%, and you can cover the difference with an extra 5%.
Be prepared for
Be
the
prepared. If they say they have, let's say, 20%, it's much easier because they can play with numbers. So 5% is the minimum. If they don't want to pay the CHMC, insurance, mortgage insurance, which is pretty costly too. So they have to be very careful when they put an offer, and with the agent, and to discuss. And I said, we have these scenarios. If let's say the appraisal comes lower, you have to just to be prepared that you have enough money to close the deal.
I mean, even for you, it's so much you have to take in consideration.
So for this,
this is what you do, really.
Yes, exactly. So for this, you need a professional agent who advise you to advise you all the way, to put you in with the right mortgage broker in place, with the right lawyer, with the right home inspector, because all this networking, it's a key of success or a failure if you don't have the right connections.
Oh my God, it's like unbelievable, so much.
I said, yes, there are three types of insurance. So let's say it's first of mortgage insurance, that depending on how much you want to pay, like a down payment. So if you put less than 20%, you have to pay a CHMC insurance, which varies between, depending on the loan to value, how much money you want to borrow from the bank, and depending on, on even what type of work you have. So, for example, if you're a self-employed, you pay a little bit more than if you are a full-time employee, which is not fair, but the bank sees that this way.
You're a risk for the bank if you don't.
Exactly.
Yeah, although you can. Lose your job.
Exactly,
Honestly,
job,
there's no guarantee you have a job in the next.
So basically, the CHMC rules for 2023, they don't approve any home insurance for credit score less than 600. So 600 has to be lowest credit score to be approved by the CHMC, which, by the way, is it's a government agency that they help the banks just in case of defaults. They can pay the mortgage if the buyer has that insurance. So they can pay the bank. The bank is safe. So in this case, the government is backing up the banks with this kind of insurance. Now, the maximum GDS, we talk about that ratio cannot exceed 39%. So this is the maximum, and then the maximum TDS is 44%. The CHMC, they don't give insurance for properties more than 1 million in price, so just less than 1 million. And then the no amortization longer than 25 years period. So let's say if you put 20% or more, you can have an amortization of 30 years or 35, like in old times. But with like a first-time buyers, and if you want to be insured, the insurer, the CHMC, is not allowing more than 25 years. So 25 years is the maximum number of years, which means you have a higher payment per month. Instead, if you have, let's say, for 30 years amortization. So it's a slightly difference, and it's better for someone to have a 30 years instead of 25, because they have a flexibility, in paying the mortgage per month.
Well, Marius, it's good to see you.
Good to see you too.
How long have you been a real estate agent?
Since 2005.
Yes.
So almost 18 years.
18 years. Listen, you work so hard. You're top 100 agent worldwide, which is fantastic. Congratulations.
Thank you so much, Scott.
And you don't just help people sell or buy homes. You do the whole pack. How do you know what to do to a house in order to increase its value?
I learned from you.
Okay, so you're a pro then.
Yeah. So I try to, explain people that if they, improve their, like with a new countertop, a new flooring, a new bathroom, a new kitchen, they will, like for each dollar, they will get maybe $1, $2, $3, $4 more.
Yes.
So this is very important.
It's the return on investment.
Exactly.
You want to take care of your clients. You're not just here to help them buy or sell a home. You help them move. You give them renovation tips.
Everything.
It's one of the reasons why you and your family family are so successful in this business.
Yes, they give me the keys of the house, and they live in Caribbean for 2 weeks, and when they come back, the house is sold for the most money.
You should have your own show.
No. So I am so busy doing that, but I love it. But you know, it's a pleasure to do the best thing for my clients. So.
Well, look, you've seen a lot. You've got a lot of experience, especially in the Markham area. Where do you see the future of real estate in Markham?
Because of the huge immigration in Canada, I think it's a good investment for investors to invest in real estate.
Yes.
And especially in Markham, because you know, it's close to Toronto. Close to 404, so it's a very very close to Toronto, and the value in long term will go up for sure.
Yeah. Yeah.
So it's a great investment.
Listen, congratulations on all your success.
Thank you so much, Scott.
You're the best at what you do.
Thank you so much.